You know, the stock market is amazing. It really is. The whole financial markets, but the stock market, it's so fantastic. There's so many different ways that you can approach it. No matter what your lifestyle is, you can find a way to integrate trading stocks and stock options and using a combination of both. You can find a way to make it work. All you need is a bank account and internet access and some desire. And I hope you have those three things. Stock market today analysis for October 24th, 2022. We see the Nasdaq's up by 0.86%. S&P 500 up by 1.19%. U.S. Treasury 10-year up by 2.6 basis points. Gold down by 0.13%. Bitcoin down by 0.83%. And oil down by 0.45%. In the realm of earnings, we had 72 stocks report today. There is a big list of them there. Tomorrow, big notable names: Microsoft, Google again. Wednesday, Meta, Ford, Bank of America. Wow, over 200 reporting on Wednesday. And a whopping over 266 on Thursday with Apple, Amazon, Intel. And Friday, rounding them out with Exxon, Abby, Chevron, and a longer list. In other news, the VIX was up by 0.54% today. The Manarino Market Indicator, risk indicator, was up, closed at 294.5, which is up a little bit since it closed last Friday. We see since the beginning of this graph, going back to August 29th, the MMRI has just steadily been increasing up, and now we are knocking on that door of extreme risk. Treasuries. The Treasury. Here's one of the dilemmas of living in Hawaii when it comes to business in the mainland. Where's it looks like all this data is reset. You know, it's almost 8 p.m. here. Come on, why is all this data reset? Oh, maybe because it's like 2 or 3 in the morning Eastern Standard Time. Hey, what the heck? You know, what can a person do who lives in Hawaii? I'll tell you what, I know what I can do, and I do those things. But one thing I'm not doing right now is showing you that data. The S&P 500, still money flowing out on the Pro 2. We see that weekly stochastic ever so slightly starting to turn up. The red has crossed over yellow. We'll see if it starts making a run to the upside. What's the probability of this run? What's the probability of this making a strong run to the upside? Well, let's go through some stocks that make up the S&P 500, and we'll go through some other stocks and see if we can figure that out. So S&P 500 today had an up day. Not a super strong candle compared to last Friday's close, and but we definitely opened and closed above that 25-day moving average and not quite close to the 50-day moving average. And now we're dealing with this resistance line right in here, right in this area. And you see over here that we've dealt with it in the past. Before, we've also dealt with it, but on this side, stocks were on the top side of it, so it was acting as support. But here on this candle, it broke through, and it's been a resistance ever since then. So we'll see by the end of this week if it could break through. If we start getting more candles like this, of course we're going to break through. We get volume like this, of course we're going to break through. This is a little bit weaker volume today, but it's kind of in line with what we've seen going back to about, right in there. In order to break through that, then we'll have to break through the 50-day moving average here. Might need a little more oomph to get through. Maybe these earnings reports this week, all these tech earnings, maybe that will help out. Speaking of tech, this is the tech sector, and XLK is kind of looking the same. One thing that's looking nice here is we got this longer tail to the downside, so that shows us the buyers pressing that up. Opened and closed above last Friday's candle. Same thing, we're now in this little range here above the 25-day moving average, and it's got to deal with this resistance right in there. Look how that volume dropped off. It dropped off enough today where you see that average volume line move down. Same thing, we got some momentum, weekly momentum showing to the upside, but we're gonna need some more oomph, and I think maybe we're gonna see that oomph come in this week on earnings, maybe. Healthcare. Wow, look, it took a boost up here, big gap. That's a strong candle, getting close to that 200-day moving average. So last week we're kind of battling the 50-day moving average, right? Got up over this 25-day moving average and came up, gapped up, but closed down below the 50-day, closed down over here, closed down at that 25-day, and then Friday, zoom, rallied up. Monday, continuing that. Boom, look at that. But that's a strong candle, but let's take note that, see this little wick to the upside there? That means price is traded all the way up there with some buying pressure. So it's probably this 200-day moving average putting the buying pressure, just like over here. Now over here, it was kind of trading along the 200-day, dipped below it, broke out above it, but wasn't able to maintain. So we'll see. We'll see what's going to happen. Volume's a little lighter. We see our average volume line starting to move down. Money's flowing in on the Pro 2, and we're starting to get a little bit of a dip up between on that weekly stochastic. But remember, the weekly stochastic, that's a lagging indicator. So right now, it's showing us that price, it's kind of probably showing us right through here. So once there's more of an established trend, that'll be a little bit better help. But nonetheless, it is helping, right? So let's look at the financials. Money's still flowing out of the financials, even though our weekly stochastic is turning up a little bit here. And today, gapped up a little bit. You see we're testing that 50-day moving average. Now that's some good volume. Oh, that's not even today's volume bar. That is Friday's volume bar. Boom, there's Monday's volume bar. Okay, so not as much volume today. Getting some resistance at that 50-day moving average. Oh, it'll be interesting to see what that's going to do tomorrow. How about consumer discretionary? We got money flowing out on the Pro 2. Weekly stochastic still red under yellow, but it's starting to tighten up just like the other sectors. Price action below the 25-day moving average. This is a bit of a bullish sign for us, right? We got this long tail to the bottom. Got a little bit of a wick to the top as it's getting feeling some pressure there from that 25-day moving average. Volume's kind of dropped off a little bit and just kind of probably going to get stuck here in this range. The XLI. With the industrial sector, still money flowing out. Stochastics now crossed over, red over yellow, below that 33% line here. Have to look to see if over time it's going to keep moving up. Volume was a little bit light today compared to Friday, but sort of in line with what we've been seeing over the last week and a half or so. Not so much of a powerful candle, even though it gapped up. We see it, prices went a little higher, but pulled back. Definitely our wick to the top is noticeably longer than our little tail to the bottom here. So even though price is pushed up here, it's probably getting this pressure here from around that 50-day moving average, pulling back down. We see in the past, you can kind of look to the left over here on these 3 months. You see this area has shown significance in the past. So that's to be expected. How about IWM? IWM, money's still flowing out, similar to what we see with most of the other equities we looked at on the Pro 2 weekly stochastic. Red is starting to cross yellow, but below that 32% line. Volume, it really right along an average of where it's been lately, but not to this average price line here. Sometimes you got higher volume kind of pushing this up, but just look across here, it's sort of in line. But the candles, that's looking pretty weak. What do we have? What kind of good news might IWM have for us though, if assuming we want to be bullish? Well, it's above that 25-day moving average, so that's good. We see this long tail to the bottom. So prices opened here, and prices opened right here, traded all the way down here, but buyers pressed that up. But overall, that's kind of looking like a weak candle, right? That looks like a stronger candle than this one. When I see something like this, it looks more bullish than that, but look, that's a spitting image, right? This is just literally this reversed. So maybe it's going to do some digesting and probably get pushed up to the upside, along with rising tide raises all ships type of thing. But when I start seeing something like that, so here, look what happened here, right? We had two up days, and we got this bearish candle, right? Very bearish. Closed lower than it opened. You see all that wick to the upside, and then it went down. So if that's a inverse, maybe we'll see some movement to the upside. How about the Qs? The Qs. This index or trust, whatever the case may be, we still got money flowing out. It's looking the same over here. Almost a very similar candle. Volume tapered off just a little bit, but more buyers than sellers. Above that 25-day moving average, longer tail than wick at the top, and let's see if it's gonna have a hard time battling that resistance area right there. How about the dollar? The dollar via UUP. Let's check that one out. We're seeing UUP really kind of snug and test this 25-day moving average. Now, last week, it's testing it, and just on Friday, closed a little bit below it. Now we kind of opened and closed below it today. And as I've mentioned in the past, sometimes sometimes what you're seeing is a direct correlation between the dollar and other assets. Right now, doesn't it sort of seem like a direct correlation between the dollar and the stock market? For example, when we look at the S&P 500 last Friday, there was this big rally up, and today, and just like there was this big rally down here, right? And then today, even though it gapped, it was more of a gap, but it was kind of like this. That's what we're seeing, is little candles like that. And what we can do is we'll turn this into a line chart. and we'll put the S&P 500 there with it, and we see we got a up in the stock market and kind of a sideways in the dollar. But if we compare these two, the S&P 500 is showing us some relative strength. On this, there's not an easy way to throw gold on there. We'd have to use something like Yahoo, but more than likely gold is maybe having a little bump to the upside. And that's right, we did take a look at that. I can't remember off the top of my head what that was, and a big reason why I can't remember, because I don't find the day-to-day fluctuations of gold to be meaningful to me. For what I'm doing with gold, those day-to-day price movements don't matter of the actual commodity itself. So the dollar, we'll see if it's going to start breaking down. Now, when you're above all three moving averages like this, it's easy to continue to stay above all three moving averages. And that's exactly what we see right here, right? It's just been going up. It probably won't go up forever, but it can go up longer. Now, when we look at this year to date, we see it starting to kind of sort of build a base right in here, with the exception of this drop. But you can see right in this resistance line or support line, whatever. And also, it's kind of, looking at here, we see a high, lower high, lower high, but we don't really see, I'm not easily seeing continuations of lower lows. And we see in the past what has happened, sort of the similar thing, like right here went sideways for a little while. That was with the 25-day moving average. Come down here, test it, bounce back up. Look at even this over here, broke below that 25-day, kind of rode above the 50-day, rallied back up. So we really need more time to see if that's going to break down. It's the same thing when equities are on the bottom of these moving averages, then it's like whatever side the stock price is on, the moving averages are supporting or resisting it. So we'll have to wait and see with that. And what's the easy way to play the dollar, though? Depends what you want to do. If you're like me and you live in the U.S., then you're probably paying your bills in dollars. You're probably earning income in dollars, and so having a stockpile of cash on the side, that's it. I think that comes in pretty handy. Myself, you can look at maybe some short-term treasury, 13-week treasury. I haven't done it myself. I haven't had bonds since I was a kid. I used to be given bonds for my birthday and Christmas and all types of things like that. But it's been a while since I've gotten any more of those. Yeah, so let's wait and see what's going to happen. There might be some political reasons why U.S. politicians want to keep the dollar higher right now. So we'll see if they're going to let it break down, if they're going to keep it high. Bonds. So generally what we see with bonds, if they're moving down as they have been and as they did today, then generally the stock market, when TLT moves down, generally the stock market moves down. But we're not really seeing that right now, right? And we're also seeing we're not really seeing the VIX. Like the VIX has gone down considerably. I think last week it was around the 30s or over 30s. Okay, maybe it hasn't gone down considerably. I guess it's still right around 30. But it's like, there's like a modest amount of fear. But with this, we have, we see risk climbing up. This was made specifically to measure risk. It's looking at the Dixie, which is measuring the dollar against other currencies, and then the 10-year treasury, for some reason, divided by 1.16. And you see it's got this high, moderate, low, moderate, high, extreme risk levels. Seems to be pretty accurate. I don't know if I would trade only using that, but it's a nice indicator. But look to see what we have going on. So this we're right there at extreme levels of risk. The bonds continue to go down. Volatility, the fear meter, it's we're in higher levels. We're in this around the 30 range. Let's throw on a comparison. S&P 500. Oh, it's difficult here. But look, you can see it right here. See this little dip down? That's in correlation to this right here. Here's another one. So a lot of times when you see the spike up, but over here, it's what is this? It's showing us percentages. Vixen. Spiked up, kind of dipped down. Is that even not even put on the right thing? Comparison. S&P 500. Okay, good, it is. All right, so I don't know if that's what we're seeing though. Because what we're seeing is overall stock's moving up right now. This is waiting to, for some reason, taking a long time to fill this. So looking at the prediction for the S&P 500. Now, I think last week we were down here. The week before we were definitely down here. Now we're moving towards the top of this channel, and I'm thinking that by the rate that this is moving up, I'm thinking that by the end of this week we could be touching the top part of this channel with these technology stocks earnings coming in. And then that would be a very, very great thing. And the reason why that's a great thing to me is that I want to see if we can break out of here and continue to be out, or if it's going to break out and fail. Now it could break out for a little while, maybe a week or so, and then fail. But if we're going to have a reverse in trend and we're going to go into a bull market, then it's got to break out of this downward channel. Without breaking out of the downward channel and remaining out of it, right? Number one, it's got to break out. Number two, it's got to stay out. So it would be great to test that. And we see that it apparently built a little base here. So what might happen is we might see this happen. We might see it break out, fail, maybe rally up again or not, but then come down and maybe get some support around here. After that, when you look in the past, you see this area that was some support. This area probably can get some support, right? Maybe all in this range be some support and resistance area. But maybe we're going to go to the upside. If you were lucky enough to catch this to the short side, then it's likely you made a lot of money, and or that you had a lot of education and maybe a mixture of the both, because it's pretty profitable. If you know how to trade bear markets, it's pretty profitable. So hopefully you've been capitalizing, or at least learning how to do that in case there's going to be this change of trend. And there definitely could be. I don't think there would be a change of trend simply based on earnings and everything's glorious in the world, because obviously there's a war going on in Europe. There's talk of nuclear bombs to be blown off. There's all types of negative news going on. And some people might say, well, there's always negative news. Yeah, well, that's true. And nuclear war probably takes the icing on the cake of negativity. So I don't know how much worse you could get than talk of nuclear war, other than actual bombs dropped and actual nuclear war happening. So it's like, there's not so much real good stuff. So what's driving the market up? What's so great in the business world that's making the market go up as we are, hearing nuclear conflict that might unfold? And it would be one thing if we just started hearing that, but we know there's a war going on over in Europe, right? There's all this stuff to, like, it would make sense that it would be this natural escalation. So the other thing that I don't talk about too much, I mentioned here or there, is we got these midterm elections coming up. And what I do talk about a lot is the plunger team, President's Working Group on the Financial Markets, I think it's called. It was came into existence by executive order in 1988 by then President Ronald Reagan. It's called the Plunge Protection Team, the Plunger Group, the Plunge Team, something like that. It's got these nicknames, but it consists of a variety of people in, like, the Treasury, the Federal Reserve, whoever else. I don't know. It's like a Securities and Exchange Commission people. It's like this group of people that they all kind of work to have some sort of, like, stabilized markets. Since it's the president's group, whatever president is in office can have this group influence the market to get sort of different outcomes. And I'm not saying this is good or bad. I'm just saying that it's something that you have to factor in, that we have these elections coming up. So maybe we're going to see, which we are seeing, this push to the upside. And then after those elections, after the earnings season, is it going to be, if it breaks out of this channel, is it going to be able to stay out of that channel? What do you think? Do you think nuclear war is great for business? Well, maybe if you sell nuclear bombs. But I don't think nuclear war is great for Dairy Queen. I don't think nuclear war is going to be, is it great for Home Depot home repair? I don't know. I don't think so. So we'll see, and hopefully there won't be a nuclear war. I really don't want to deal with that, but I guess I'll have bigger things to worry about if that happens, other than, can I get this YouTube video published on time? So we'll see what happens. We'll see. I think there's a good chance we're going to be testing, before earnings season's done, we're going to be testing this channel, maybe even break out of this channel. But then we'll have to see what's going to happen. It's definitely moving towards this channel, and that's a great thing. What happened in oil today? Oil has basically been moving sideways, but not straight across sideways. Up and down sideways. And I've been trading a lot of oil lately, actually. I have been. It's been pretty darn fun. And right now we're sitting here at 84.76. You see that's a wide trading range today, even though closed lower than it opened. And we'll see what's going to happen. It's testing this 50-day moving average and just failing on that 50-day moving average test. So, if you want to learn how to trade oil, you got to paper trade. Absolutely. If you're watching this video to get some understanding, then if you're learning from me, then you definitely do not have the skill to be trading in the futures, because I barely have the skill to be trading in the futures. It's a very dynamic market. You can lose a lot of money very easily. And one of the reasons why is that the margin on futures, it's different than the margin in stock trading. The easiest example I can give you is, like, let's say the stock right here, NLY, right? If you wanted to buy this, let's just make the math easy, 17 bucks. If you had $17 in your account, you'd be able to buy the stock, assuming you don't have some fees or commissions and stuff, right? So let's say you have $17, only 17 exactly. You buy the stock. Now you own the stock. You traded $17 of some sort of currency. And in this case, we're talking about USD. You trade 17 USD for this stock. You get one share of it, and that's it. That's it. It gives you some dividends, so it brings in more money. And if you want to, quote unquote, make money, you would have to sell NLY for a higher price than 17. But in the meantime, if this was 17 and you bought NLY here and now it drops all the way down here to like 15, you don't have to come up with more money. But in the futures world, you do. So in the futures world, the way it works with this 17, if you wanted to open up a futures contract at 17, you would need money in your account called margin. There was enough money to kind of ante up to open this position. And if that position went against you, you need more money in your account to keep that open. So to relay it into stock terms. So let's say, pretend this line right here is 17 bucks. You buy NLY here, it drops down on you. When it's dropping down, your broker is going to be looking in your account and going to be basically not telling you, but what's going on. It says, hey, I know you had $17 to open up this position here, but now this position's went against you. So you need 25 to keep this position open. If you don't have 25, we're closing this position out. And then you get closed out at a loss beyond your control. So there's these moving part of margin that is interesting, to say the least, to deal with. So you want to learn how to do that, you got to paper trade. You start playing around with trading futures and you're not even good at trading stocks, you're gonna get wiped out really, really quick. That is my October 24th, 2022, 8:17 p.m. prediction is that if you trade futures without really being good at trading the stock market, your money's getting transferred over to somebody else. So your money won't go to money heaven. Your money will go into someone else's pocket. So you want to learn how to trade futures, start with the stock market. Start paper trading. GOLD. GOLD is, what are we doing? What day was this? The 21st. Guess that's going back to Friday. This was probably Sunday, combination of Sunday and Monday. So we're kind of in this range. It looks like here is going to be our bottom. This is going to be our top. And I think I showed you in the last, was it the last video? I don't know. But I'll show it to you again. A really kind of just general, easy way that you could trade gold. Now, I mean trade the paper price of gold. I don't literally mean you're trading the metal. If you want to do that, you're not going to do this. So if you want to actually have metal in your possession, this is not what you'd be doing. This is just to do in your stock brokerage, knowing that there's no way possible, or very, very low way possible, that you'd ever be actually taking physical ownership of any of this metal. And this is only a trading strategy that you could dial in on to get good at growing your USD. So not growing your gold stash. Now we're looking at actually we're looking at the wrong thing. Oh. So you can do this on very easily. You can do it on Yahoo Finance. And what you're going to do is you can pull up the chart of gold, and then with this comparison button, then you put in UUP. And so now you're correlating gold and the dollar. And generally speaking, right? Generally speaking, we see when one goes up, the other one's going down. So right here, you see the dollar going up, or excuse me, you see gold up, and you see the dollar going down. So what's been happening lately, right? We were talking about this in the past. What's been going on lately is for about the last year, dollar has been going up. And what's been happening to gold, right? Here's gold. Gold's been going down. Dollar's been going up. So what would you do? You would short gold. How would you do that? You could straight short the stock. You could sell naked call options. You could sell covered, you could sell naked call options. You could sell call credit spreads. You could sell, you could buy a put option. You could buy a put spread. So there's a variety of ways that you could profit on stocks when they're going to the downside. The stocks, options, whatever. Use the combination of them. The biggest thing is being able to pick direction. Once you have an idea of when you can accurately determine direction of something, then you can apply the appropriate strategy to that direction, your account size, your ability to monitor the position, your goals, your all these things. And I'm not a financial advisor, and I'm definitely not your financial advisor. I don't even have any legal paperwork to financially advise myself, so I hope I don't get in trouble for giving myself financial advice. So I guess I'm running the risk of being my own financial advisor. I don't know how that's going to go. In fact, would I get in trouble if I cut my own hair if I didn't have an esthetician's license? I don't know. I'm living life very, very risky here. I'm cutting my own hair. I don't have a beautician's license, and I don't charge myself for cutting my own hair. So, and do I charge myself for giving myself financial advice? I don't know. I'm going into circular logic here. It doesn't really make any sense. The point is that this is not trading advice. Take this advice, go to your legal expert, and see what they think. But isn't this interesting that as the dollar goes up, gold goes down? And sometimes they work together. Where was it working together? I don't know, but sometimes they do. Right, where was it? Right there. No. See, dollar going down, gold going up. So you can play with that. How would you play with it? Paper trade it. Paper trade these things. Paper trade. That's the best thing to do is paper trade. Bitcoin. Man, look at that. Sideways, but slowly. Very slow going down. How can we tell? Okay, we got a 200-day moving average going down. We got a 50-day moving average that looks like it's, if it was just sideways, look at the distance between right here and look at the distance between right here. So it's slightly going down. That 20-day moving average looks to be turning over. I mean, there's no volume. Even though we don't have any volume bars, there's really no volume. Look at how it's barely, seems like there's barely anyone trading it. It's not, at least back here we had some movement. I used to get all aggravated. Aggravated is really not the right word. I used to just kind of, my mouth used to water thinking, wow, if I lived in a state where I could be trading Bitcoin out of this brokerage account. Wow, look at how much it moves. Right now it's not really moving. So what could that tell us? It could tell us that this is just where it's going to go. Technically technically, it's a cryptocurrency. Currency should do this. You shouldn't need to try to pay for something. That's Bitcoin was first invented, right? To be a method of transaction, a means of payment. Well, you don't want to buy a pizza with something that you don't know if the next day if it's going to be worth a whole lot or a whole little. You want to have this constant value. So as whatever this medium of exchange gets passed around, like the third person to get it has roughly the same amount of value as the first person. And that's not what we saw in the past, though, was it? We saw this quote-unquote supposedly medium of exchange start skyrocketing in value, so no one wanted to pass it around. Not only did no one want to pass it around, but apparently the fees to pass it around were really, really high. And it just, all these transaction fees or whatever, I'm not the best one to explain all that stuff. But this would look a lot better, if it's going to stay in this very, very thin trading range, then maybe it's got a better shot for becoming a medium of exchange. Which you got the whole the whole brain. You got the whole U.S. government against you on that one. I think I don't think they're going to let go of that too easily, but who knows? So I'm excited to see what happens. It's very, very slow. Like if we just look at moving averages, then it's below all three moving averages. So it would like right now it seems like this very slow move to the downside. And I don't know. I don't even. I personally don't like. I understand certain things about Bitcoin, but I don't really study it like some people do. I do understand it's kind of general economics and some general macroeconomics, and what I understand really well too is political power. So I don't know. It's going to be interesting to see how this unfolds. Actually, what I was trying to get to though is like, what would be a good price? What's a fair value price? What would be a price that if Bitcoin goes to, that your good buddy Brent would want to be a buyer? I have no clue, to be honest with you. I don't know. I'm not sure. I think if a price that would excite your good buddy Brent would be maybe like 2000, maybe around $1,000, $1,000 to $2,000 back in like 2017. That seems like a good price because I don't know. We'll see what's going to happen. This is a weekly chart, 10 years, right? And this here's back here in this all-time highs to get up around these 60,000 or whatever. Another thing that I think that is worthwhile to keep in mind is that when it was in this range, there was a lot of people coming on YouTube talking about Bitcoin is going to 100,000 in the next 3 weeks. Bitcoin's going to 1 million in the next 2 months. Like, if you really dig around for this stuff, you're gonna see some ridiculous claims that where is it? And where are those people now? When they had all this talk about how where is it? We don't see it. So, like this chart, I don't think will give us good representation of, going back to the actual conception of Bitcoin. But I would think that if we looked at a big enough chart on Bitcoin, we'd see that overall it went up. So maybe it's going to go into this long bear market for a little while. And if I lived in a state that that was able to easily trade Bitcoin, I know what I'd be doing. I'd be waiting right now, and I'd be trading it. I wouldn't be a hodler myself. I would short it. I would go long, because if you're able to accurately go short and go long, then if it's going to go to 1 million, you'll just ride it up. If it's going to go down to 10,000, you'll short it down. Either way, you'll be good. The people I think that are the most kind of in the worst position are the people that only know how to buy and profit from buy low, sell high. You don't want to be that type of person. If you only know how to profit, buy low, sell high, like you're in a bad position. You want to be able to profit in all directions. In fact, if you're a super big Bitcoin enthusiast, you got to look into, I think, Ledger X, see if that's still open, see if they're still doing options on Bitcoin, because right now you want to be selling iron condors, and that's not financial advice. So you gotta check with the Securities and Exchange attorneys in your own neck of the woods to find out if you should be doing that. But it's something to look into. Paper trade, that's what you got to do, man. You got to paper trade. You got to test this stuff out. You don't want to be risking real money when you don't know what you're doing. You don't want to learn how to play this game with real money. You know, would you step into the ring with Mike Tyson in his prime for your first day of boxing to learn how to box? Would you do that? There might be some people that are keyboard warriors that get all keyboard tough that they'll type in here, yeah, I would absolutely do that. I don't believe you. And I think the majority of people that would answer that honestly would say no. I wouldn't step into the ring with Mike Tyson in his prime as my first day of boxing, or my first week of boxing, or my first month of boxing. But when you start trading real money, you don't know who you are stepping into the ring with. Everybody comes to the same market. If Warren Buffett is buying shares of Apple, you think he's buying it in some special pros only, billionaires only market? No. He's buying it in the same stock market you're buying it from. And you think he only value invests? You better take a look at his record of options trades. So you just don't know who you're up against. Even if it's people you don't know. I think all these people that work on Wall Street, you think that they don't have some inside information, have some good idea of how to use this stuff. You have to be expecting that anybody and everybody is your competition. You know, there's a saying that at a poker game, if you look around and you don't know who the patsy is, then it's you. So if you think you're going into the stock market and you don't know that you don't have this realization of you're playing against people that are totally okay with taking your money, then you're probably the patsy. Don't be the patsy. Don't show up to the game without understanding how to play it. And, you know, to this day, like, I'm still paper trading in my own strategy, selling cash secured put options on stocks that I wouldn't mind owning the rest of my life, that produce dividends, that I think if I have to own them the rest of my life, they're going to be around and they have a good chance of price appreciation. And I sell covered calls against them after that. If I get called out, it's at a profit. If I stay in, I just keep reducing my cost basis. Like, that's my bread and butter. That's what I do. That doesn't mean that like I know everything or anything, because I'm still paper trading. I'm still paper trading, even with selling call spreads, or excuse me, like credit spreads. Sometimes I'm just not 100% certain, or I'm not even like 70% certain. And so you know what I do? I don't risk the real money. I put on the paper trade, because then I still get to find out, hey, was I right or was I wrong? And then it's more information. And so do it. Just paper trade. Don't make up excuses. Just do it. You have nothing to lose and everything to gain from paper trading. And then go to ihavesuccess.com, download some free stuff. And then every day, except for Saturdays, I'll be sending you videos, market information, and at some point, I'm working on some sort of product. It's either going to be free or really, really low priced. And you'll have first access to that, possibly even at a discount. And when I mean really low price, maybe like $5 or $10 if it's not going to be free. Now that doesn't mean a year, 2 years down the road that I'm always going to be creating these low price products. But the whole idea is like, in my opinion, if I can't create a product for $5 or $10, how am I going to create a product for $200? So create a $5, $10 product, get that under my belt, learn from that, and keep going up. So we can learn together. And I hope we do. I hope you guys have a fantastic night. You know, the stock market is amazing. It really is. The whole financial markets, but the stock market, it's so fantastic. There's so many different ways that you can approach it. No matter what your lifestyle is, you can find a way to integrate trading stocks and stock options and using a combination of both. You can find a way to make it work. All you need is a bank account and internet access and some desire. And I hope you have those three things. You have a fantastic night. Bye-bye.